Central Bank of Nigeria governor says government is determined to improve access to finance for businesses and households. Bond funds grew by 443.80% year-on-year in 2020 as oil prices dropped by 1% Friday on US dollar strength. The program is Business Express, reaching you on the network service of the NTA from Abuja, Nigeria's capital. I am Benny Adams. It is Business Express, and we start with the news that the rebound in Nigeria's gross domestic product in Q4 2020 was driven by the federal government's economic policies and the Economic Recovery Growth Plan aimed at stimulating growth. In sustaining the growth towards overcoming the pitfalls of the recession, Central Bank Governor Godwin Emefiele at a special summit on the economy in Lagos said there is an urgent need to sustain the accommodative fiscal and monetary policy measures with a view to improve access to finance for businesses and households. He called for a concerted effort from all stakeholders to address the issue of smuggling in order to promote domestic products and grow the nation's economy.
The central bank will remain at the forefront to fight smugglers in this country. We will not allow smugglers of goods that are banned, goods that are not allowed, goods that are restricted, goods that can be produced in the country. We will not allow those goods to come into the country. We will collaborate with any security agency willing to work with us, because we must protect our own local industries. It is only by protecting our own local industries that we can create badly needed jobs for our economy. It is only by protecting our local industries and then making it easy for people to access low price credit.
The Minister of Finance, Budget and National Planning, Zainab Ahmed, says with Nigeria's exit from recession, the major target of the federal government at present is to bring down the rate of inflation to below double digits. Given further details on the current state of the nation's economy, the minister said pushing the GDP growth far beyond the population growth is also a priority being considered, so Nigerians can adequately feel the impact of government's genuine efforts at development.
The National Assembly was very, very critical in this process, because without wasting any time, they were quickly able to pass an amendment to the MTEP and amendment to the budget. They were able to sit with us and review the economic sustainability plan and gave us the flexibility that we needed, including accommodations to incur deficits that was higher than the deficit that is defined in the Fiscal Responsibility Act. Every country needed to do that, and in an exceptional circumstance, the Fiscal Responsibility Act allows us to borrow more than 3% to GDP threshold to be able to manage a national emergency. If we say we will not borrow and therefore we will not build rails and major infrastructure until our revenue rises enough, then we will regress as a country, we will be left behind, we won't be able to improve our business environment, and our economy will not grow.
Global foreign direct investment collapsed in 2020, with Nigeria recording total FDI of $2.6 billion in 2020, down from the $3.3 billion it attracted a year earlier. Musa Abubakar reports on performance of states across the country.
Businesses are gradually picking up after relaxation of COVID-19 restrictions. This is after the economy had been ravaged by the pandemic. Amongst what's hit is foreign direct investment into the country for the year 2020. Recent figures released by National Bureau of Statistics show the total value of capital inflow for the year fell to $9.7 billion from $24 billion in 2019, representing 59.7% decline, the lowest in 4 years. However, more foreign capital inflows came through other investments, followed by FDI and portfolio investment. Equities supplied the largest chunk of capital inflows, while the United Kingdom was the major source of investment in Nigeria. By destination, Lagos emerged as the top destination of capital investment in Nigeria with $8.3 billion, followed by Abuja with $1.3 billion. Others are Abia State, $56 million, Niger, $16.4 million, Ogun, $13.4 million. Anambra recorded $10.2 million, Kaduna $4.03 million, Sokoto $2.5 million, and Kano $2.4 million. The report stated that about 26 Nigerian states recorded zero foreign investment in the whole of 2020, and most of the states are from the northern part of the country.
Well, from that background report by Musa, we begin our discussion for today, and our guest with me in the studio to discuss performance of state in attracting foreign direct investment into the country is an investment economist by name Amos Sakaba. Amos, it's a pleasure to have you.
Thank you very much.
It's been a while.
Really?
Okay. So, from the NBS report, 26 Nigerian states recorded zero foreign investment in 2020, but Kaduna State has distinguished itself doing well in attracting investment. In fact, it was the best investment destination in Q1 of 2020 and is still among the top 3 in the country. What do you think Kaduna State did differently?
Yeah, thank you very much. Yeah, the performance of Kaduna State is not surprising because in 2015, the Governor Rufai initiated an economic development plan for Kaduna State, just in line with the federal government economic transformation and growth plan. And what he did there is to identify those areas that need to be reformed. Because investors go to countries or go to locations where they are welcomed, where they are facilitated, and where they are supported. So what Kaduna State did was to initiate a series of reforms, right from the fiscal policy to transparency in governance in terms of the media display of what they are offering to investors and the cost of doing so. They have also used the opportunity to look at set up institutional legal framework for investment promotion. In fact, the Kaduna State Investment Promotion Agency, is one of the best. It has very good professional staff trained to handle investors professionally. So what we have seen is not surprising. He is consciously, deliberately taking steps to make Kaduna State a preferred location for investors.
Okay, Kaduna State is in the north, but most of the states that actually recorded zero investment within this period are actually northern states. What happened to up to like 26 states that recorded zero investment?
Thank you. I think we have to give it to the COVID-19 and also concerns about security in the northern part of the country. But Kaduna is not insulated from these challenges. And we have seen that they are still able to attract investors because they have done other things that states have not done. Most states in the north don't have legal framework for investment promotion. They don't even have policy trust for investment promotion. They inherited investment and property development companies that were designed to build houses and sell, take up shares owned by state government in corporations. And we have seen that that is no longer the case, because those agencies are competing with private sector to do those things that private sector is not to do better. But more importantly, in the north, these agencies are even doing nothing right now. And we have advocated that they should transform these ones into promotion agencies, so that government will concentrate on creating the enabling environment that will attract investors, instead of giving contracts for building houses or selling or doing things that private sector is already doing very well. So to me, the framework for investment promotion is important. The institutional framework, set up a place, get professionals, train them, because investment promotion is a professional area.
Okay, where is the place of the private sector in promoting investment, whether at the federal level or at the state level?
Yeah, private sector are the ones actually doing the promotion, because they are the ones that are into partnership with foreign investors. They are the ones that are signing, they are doing mergers and acquisitions.
With all the MOUs.
Yes, and MOUs. So they are playing their role, but the responsibility of government is to create the enabling environment.
Okay, talking about enabling environment, the ease of doing business actually attracts investment in countries, in states. How is this policy helping attract investment at state level?
Yeah, you see, every investor that comes into a country, it goes to a particular state, it goes to a particular local government, in fact, to a particular community. So if you don't have investment facilitation consensus all the way through, the investor can come to Abuja through the Nigerian investment promotion and is professionally received, he gets soft landing, but he goes to a state, he's frustrated because they don't have the mechanisms to support investors professionally. In fact, I can tell you that local governments also need some understanding of what investment promotion should be. So for the states, when countries are being rated by World Bank doing business, they look at what happens in some states. They are not even, the federal doesn't have land, but there's a federal framework. The Nigerian Investment Promotion Commission is essentially doing that to attract investors to Nigeria and advocate for reforms in the investment climate and market Nigeria. But beyond that, investment promotion actually is domiciled in the states and in the local government. So if the states are not doing so, and that's what Kaduna has done. In fact, Kaduna is shifting towards becoming one of the best global practice in terms of investment promotion and facilitation.
Wow, I'm proud to tell you I'm from that state. But that's,
congrats.
Yeah, but that aside, you mentioned promotion facilitation. We know security is another thing that is key to attracting investment. We also have issues of land availability. Then automation of systems, where someone starts a process and ends. That openness, how can we get that done in other states?
Yeah, you are right. In Nigerian investment promotion, there is a one-stop investment center. It's essentially created to streamline and fast-track processes. All regulatory government agencies are there to make sure the investor is approached on that Team Nigeria approach, ready for business. And Kaduna State has done that. The investment promotion agency there's an inbuilt investment promotion, one-stop investment center also in it. So they are able to also go use modern ICT facilities to quicken the process, to transparently inform investors that this is what they get when they come, this is what it will cost them, and this is how long it will take them to get the services. Our investors want to plan. They want to be sure that when they get to a place, there is somebody that will give them hand-holding support to enable them navigate through legal and regulatory bottlenecks that most states are experiencing right now.
So the call now is for other states to take a cue from what Kaduna State is doing.
Yes, the states should take investment promotion seriously.
Ease of doing business.
They should take investment promotion seriously, put the legal and regulatory framework, get staff, train them, and indeed Every civil servant needs investment promotion tonic.
Okay, finally, if from all the scenario you've painted and what you've suggested states to do, what's the possible projections, your projections for 2021 in terms of attracting investments by states?
Yes, by God's grace, we hope that COVID-19, the impact of COVID-19 will be under control, and then investors having come from background of where to invest, what to invest, and to recover from the negative impact of COVID-19, I think there will be an upsurge, maybe towards Q3 or Q4, of people wanting to see alternative options for investment. And you saw in Nigeria, luckily the federal government is taking a lot of measures that will expand the cost for investors. And the ease of doing business, Presidential Committee has done a lot. But all we need is to be able to put systems in place that will enable those decisions, those policies, those executive orders to work.
Thank you so very much, development economist Amos Sakaba, for sharing your thoughts with us at this particular time.
Thank you. I'm glad to be here.
You're welcome. Well, moving on, Nigerian exporters are bracing themselves to benefit from the numerous trade opportunities on the African continent. This is with the official commencement of the AFTA in January 2021. As part of strategies, the Institute of Export Operations and Management held an enlightenment forum for its members nationwide. Joy Uzo reports.
The conference attracted business owners and trade facilitation officials in the country and has as its theme repositioning businesses for African Continental Free Trade Area (AFCFTA) in a post-COVID-19 era. Conveners are of the view that for them to fully benefit from the single market for goods and services which the AFCFTA provides, it is critical that they take definite steps to position themselves.
We are domesticating the various MDA's laws to make them to be compliant with the provision of what we ratify inside Africa Continental Free Trade Area. Because until domestication is done, we cannot actually use it under our law. So that is being done. Apart from that, there is massive sensitization going on. All what we need to do is to put in place the productive structure, or things that we allow to be more productive, instead of having exportable products.
Every business needs to look inward and see how they can harness technology so as to benefit from the AFCFTA. That for me is much more critical. And then finally, government needs to improve on infrastructure.
See what we can do with all the resources given to us. There's no local government in the South and South that doesn't have one thing that is particular, that doesn't have one product. So it is left for their government and the entrepreneurs to work up and then fine-tune this and set this product into the markets.
Nigeria is a country that is out to diversify, and the African Continental Trade Agreement is actually a good platform that will enable us spread, in areas of diversification that has to do with both imports and exports of our products.
The Institute of Export Operations and Management is a trade support institution established in 2014 to provide knowledge and technical support to stakeholders within the entire export business ecosystem. In Port Harcourt, Joy Uzo.
We now move to the commodity market, where oil prices fell on Friday as expectations grew that with oil prices back above pre-pandemic levels, more supply is likely to return to the market. U.S. West Texas Intermediate crude futures dropped 96 cents to $62.57 a barrel. Giving up all of Thursday's gains, Brent crude futures fell 1.3% to $66.02 a barrel, following a 16-cent loss on Thursday. Strategists say crude oil retreated modestly from recent highs amid a risk-off sentiment as Asia-Pacific equities pulled back broadly following a sour lead from Wall Street. The sell-off in bond markets globally are weighing on commodities, which are non-yielding as China's sawmill futures slid nearly 5% in their sharpest decline in 8 years on Friday. A look at the prices. And on the capital market, it seems the bears have returned, with the market losing. The losing streak continues. ASI, that's the all share index, finished today at the end of trading at 39,799.89%. The volume of shares that exchange hands in the market amongst investors is 507.9 million in 4,665 deals valued at 2.4 billion naira. Market capitalization was 17.3 trillion. It is expected that the market will get better with Bruce. Okay, we also have the top trades being led by the top trades. We have Nemo Bank, 304.5 million volume valued at 197.2 million. FBNH is 3.7 million volume of shares valued at 226 million, while the third is Zenith Bank with 26.6 million volume of shares valued at 677.4 million naira. Well, on the global stocks fell on Friday, with Asian shares down by most in 9 months. Nneka Oko has a review of market activities.
Stocks in Asia fell sharply on Friday following an overnight drop on Wall Street as a rapid rise in bond yields rattled investor sentiment. In Japan, the Nikkei 225 led losses among the region's major markets as it fell 3.99% to close at 28,966.01, while Hong Kong's Hang Seng Index plunged 3.64%. Mainland Chinese stocks also fell on the day, with the Shanghai Composite down 2.12%. European stocks retreated slightly after global markets were upset by a sudden spike in bond yields that sent investors fleeing highly valued segments of the market. CAC 40 of France slipped 0.53% to finish its trading day at 5,753.49. London FTSE 0.22%, while Germany DAX declined 0.24%. Contracts tied to the major U.S. stocks were volatile in early trading. The Dow Jones Industrial Average dropped 1.75%. The S&P 500 lost 2.4% to clinch its worst day since January 27, while the Nasdaq Composite shed 3.5%. African markets also plunged on Friday, with most stocks recording losses except for Ghana's GSE Composite, which traded in positive territory to close at 2,177.43. That's global markets. I'm Nneka Oko.
Thank you, Nneka. A collapse in bond prices in the last couple of days led to gains in the US dollar this Friday. Let's see the exchange rate. This is where we end this episode of the program, the last for the week. Don't forget you can access this and all previous episodes on YouTube, and you can also communicate with us on Twitter. The handle is NTA News Now. The hashtag is BizX. Stay safe while thinking and doing business.